You've given a pretty wide range of estimates in terms of where operating profit growth is going to come from, low to high single digits for 2024, as you face a number of market challenges. What's going to determine where in that range you end up, Dolf?
Very good. Good morning, and thanks for having me. Yeah, we deliberately started the year with a wide range, low to high single digit. For sure, we feel positive about the new year. Last year, we had to navigate a lot of volatility. Overall, pretty proud of the resilience of the company and our people. We generated a very solid revenue growth at plus 5.5%. Our operating profit grew organically. We had strong profit growth out of our most important regions, Europe and the Americas region. Very importantly, we see moderate but sequential improvement in our volumes as inflation is starting to come down and consequently the need to take pricing. We had double-digit pricing in the first half last year, high single digits in the second half, and we see pricing further decelerating into the new year, and that for sure will help the volume momentum of the business.
So that will help the volume momentum. Just a little bit on that then. You've talked this morning about balancing growth from volume and from value. So we would expect you to be less willing to sacrifice volume growth, I suppose, now, Dolf. What do you expect the volume picture to look like?
Yeah, indeed, balanced revenue growth is important with a good balance between volume and pricing. Last year, indeed, it was predominantly driven by pricing. That was out of necessity due to very strong inflation on our input cost. We have started seeing that decelerate already in the second half and much more moderate input cost inflation in the new year. Consequently, much less pricing. And therefore, we do believe we will be able to generate more balanced revenue growth.
Dolf, it's Kriti in London. I want to zoom in on that pricing picture as well. You've been far more aggressive in those price hikes than a lot of your peers around the world. How much longer can that sustain, especially when we're still talking about a recovery for Heineken that could still last 12 months or longer?
Yeah. Now, in the end of the day, you need to earn the right on your prices. And as such, I think it's really good to see that we need factually very little pricing in our developed markets like Europe in 2024. It's important to differentiate between developed markets like Europe and some emerging markets where there's still quite some inflation. But I think we are, pretty experience in how to navigate that. Importantly, we see premium beer still doing very well. If you isolate for Vietnam, our overall premium volume was growing last year, significantly outpacing the total portfolio. The majority of our markets, we see that is the case, and it will really help because it will mean that you don't need pricing, but you actually generate positive mix effects to generate the revenue that we aspire to.
Dolf, when a lot of people, especially beer drinkers, think about whether or not they want that next bottle, they're also very concerned about beer belly. Forgive the joke there. Weight loss drugs like Ozempic have been something of a topic for a lot of consumer brands like yourself. Is this something that Heineken is monitoring, this trend? What kind of impact could it have on not just your company, but the beer industry broadly?
Yeah, no, it's something that a lot of people are talking about. We are following it closely. We see very limited impact at this moment or anytime soon. What is important is that we keep innovating in our product range. Low and no alcohol products have been, one of the hottest part of the beer market. We are the global leader, absolute and relatively, in 0.0 beer. Heineken 0.0 is the #1 0.0 beer on the planet. Continues to grow very fast. Our 0.0 beer portfolio grew in a mid-single digit, vastly outpacing the total portfolio last year. And we really expect that trend to continue. In some of our key European markets, 0.0 beer is already 5 to 10% of the total beer market. The rest of the world still lower, but even in places like Brazil and Mexico, we see 0.0 beer growing very fast, and we really intend to capitalize and actually lead that trend.
You say you're seeing no impact or not much impact from, or limited impact, I think you said, from Ozempic so far, and you need to keep innovating. What kind of analysis are you looking at on that front? When will you start to see what impact this drug and this new wave of drugs is going to have on your business?
Look, at this moment in time, the number of people is still limited. The cost of the medicine is very high. For sure, we are not, underestimating this. We follow it closely. But we're a global business. The majority of our business is actually in emerging markets, where we don't see consumers being able to afford even closely these medicine. But more importantly, we really believe, for example, with products like Heineken Silver, which is slightly lower alcohol, but also lower carbs and calories, that we do have the portfolio to stay relevant with our consumers, because that is our number one task, in any scenario.
Dolf, a final question to you. You're talking a lot about the emerging markets and the growth there. If you look at the numbers, it looks like currency weakness is where you're taking a pretty big hit. Is Heineken hedged at all? Do you plan to be?
Yeah, we always hedge, in the countries where we can. And by the way, emerging markets, it's a broad concept. We had very strong performance in our largest emerging markets like Brazil and Mexico, growing volume in Brazil, growing share, growing revenue. India is becoming a very important source of growth. Ethiopia is doing very well. Balanced against some of these markets that are more challenged, that are facing these devaluations. And therefore, we really believe in the power of the breadth of our global footprint. And again, we feel much better going into the new year. As with the lower pricing, we do see volume momentum continuously improving. We continue to invest in that growth through our brands and capabilities.